Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, April 22nd, 2021. Want to do an update on the broad markets as well as some of the recently highlighted trade ideas as far as individual stocks go. All right, so here's where we're at on the NASDAQ 100. The other day I said we need to take out, well, we first had to take out 13,772, which we did, but then at the same time the S&P 500 tested and held above its comparable support. So there was it was what I call an unconfirmed or a unvalidated sell signal. You need both indexes to break down. So then at that point I said, well, at this point you had a little dip below, snap right back up, need to take out the lows from the other day, and that's where we're at now. In fact, we've already hit that level once at the lows today and bounced. I mean, that's that line right there, and we're right there. So by the time I do this video, finish this video, we could break down, sell off into the close, or hold that support. Like I like to say, support is support until unless broken, but that's it. So to keep it very simple, it's 320 right now as I'm starting the video. Break under today's lows would should open the door to the next move down, but of course I'm about to get to the S&P 500, and that's also testing support, so we need to see that go, and then that would give you a move down to my near-term target. So that's what NQ looks like. For you ETF traders, you have a similar level on QQQ, and that's right here at about 334. We'll color it up yellow, 334, 394, whatever, give or take. So call that 334. That needs to go. So that was the same level we hit the other day on the NASDAQ 100, the lows. We're testing them again today. We had this little uptrend line break and back test here. So boom, that's it. We need to take that out. That should take us down. These are all support levels where you could have a reaction. That's a pretty decent target, minimum target if you want a quick swing trade, but I think we'll probably go on and hit some of these deeper targets that I showed you before. And then on the S&P 500 futures, ES, let me cue that one up for you. 1 second here. While I find that chart, there's my ES chart. Okay, around 4,100, give or take, right there. That's our support level that needs to go. To recap, we put in the most recent divergent high, just like we had back here. Divergent high correction, divergent high correction, divergent high correction, and divergent high right there. So far we're dancing above that 4,100-ish support right there. Need to take that out, and that should open the door for a move down to 40.55. And then ultimately I think we'll come back here to that 39.75 if we get that sell signal soon. And then jumping over to the SPY 60-minute chart, there's a comparable level right there. Is at 410.39 is where I have it. So that's what we need to do. We need to break that level, and if and when we do, that should open a door to move down to at least the top of this gap right here, support zone, T1 zone. That's about 403.25. Bottom of the gap is 471. So if yeah, those are your likely support levels where the buyers are likely to step in on the first, on the first leg down, and it should be a quick one. The catalyst today, we had a decent reversal in the markets. That was on news of Biden's talk of increasing, nearly doubling the capital gains rate on wealthy individuals, those making over $1 million or more. And with the Dems running the show right now, there's a good chance that does get pushed through. So that talk about a potential catalyst to get a nice sell-off in the market. Now, of course, that would be a while away before that happens. But if investors, those high net worth investors start to get wind of even the potential to double capital gains, you're going to see some big old profit taking in this market before that even happens. If it looks like there's a good chance it will. So either way, that's the fundamental catalyst, but all it did is take us down. We're still above support. The technical catalyst, which is all that really matters, is a break below 410.39. Solid break, especially a 60-minute close. So there it is. That's the markets. IWM, bigger picture lately, it's been moving around on the 60-minute chart, but we hit that trend line pullback target I had. That's the downtrend line off the March lows after the shutdown, put the markets down last year. I mean, we already broke that trend line on both the S&P 500 and NASDAQ 100, and so that's the first tag on the first tag in a while, that is. And ultimately I think it'll go based on the divergences. I mean, the trend line will get taken out if it happens soon, minimum target, and it's not too far below. It's 205. If 205 goes, that opens the door to a much bigger drop down to that 170 target, which, you know, again, based on the technicals, I think will be hit. So it's just a matter of when we get those sell signals. And you know, they look imminent to me. Here, let me show you a few other charts, then we'll move on to some individual trade ideas. I'll keep the video short and get it out to you guys. This is the NAA50R, one of my many breadth indicators that I track. And you can see, I don't know if you can see in the video, I had the numbers are tuned down, but what it shows, all the biggest drops, this goes back to the last bear market there, the one in 2007 to 2009. It was about a 55% drop in the NASDAQ, and that was preceded by, as all these corrections, I'll read them out to you, that was about 17.5%, 17%, 15%, 17. I'm talking the drop off these divergent highs, 22%, 28%, somewhere along there. Even bigger in the S&P 500 on that drop. And what do they all have in common? See these divergences? This is the NAA50R, the percentage of stocks trading above their 50-day moving average. And you look for these divergences during a rally. And you get a rally when the market keeps going up, but the percentage of stocks trading above their 50-day moving average starts going down. That's the divergence I'm talking about. That often precedes corrections. You know, I have it also on the, we can look at it on the S&P 500 right here. Nope, not that one. Let's see, I've got it somewhere here. The 50, there it is. Same thing. I'm not using log scaling on the S&P 500, so the drops don't look as big, but they are. Again, that was a 55% drop. And you know, when you don't use log scaling, some of the charts I do, I just don't have it set here. But the point being, you look at each and every one of the big corrections, as I've shared this before, just as with the NASDAQ composite, every correction or bear market for at least the last 13 years in the S&P 500 was preceded by a clear deterioration in market internals, as evidenced by the divergence between the S&P 500 and the percentage of stocks within the index trading above their 50-day moving average. So there it is. There's the those are the drops, the corrections, and you know, all we need now is to throw in some sell signals, because I always say divergences can and often do continue to build. And then when you get a sell signal, they play out. So based on this and the scope of the divergences, be looking for at least you know, better than probably a 10% drop, which should take out, you know, go beyond those minimum targets I showed you a minute ago. All right, individual stocks, let's just jump over to that and get the video out to you guys. Some of the recently highlighted trade ideas, you know, as far as the longs go, remember the market's kind of been puttering out lately. This one panned out okay. We had that correction. Bitcoin's in a correction mode. I think there's a lot more downside in Bitcoin. Ethereum, at least this tracking ETF type vehicle, ETCG, I mentioned on a breakout above 2244 was resistance. We broke out, back tested. Two little momentum fueled overshoots, both backfilled that gap. And then, you know, from there, you know, if you bought the pullback to that level, that's about a 32% run. But we do have divergence building. So I think I would suspect, well, I can tell you, if the divergences, you know, materialize and we start to move down, they're confirmed like this, then we're going to come back in and either backtest or even fail the breakout. Let me just jump over to Bitcoin, because that was highlighted as a trade idea. It's an actionable trade. We broke down. That's my primary uptrend line on BRR, Bitcoin futures. You're looking at a 6-month chart with 2-hour candles. Divergence has been building. Gap down, broke down impulsively. There's nothing more impulsive than a gap down below a trend line, and that's what happened right there. There's your gap. Hit my first target support at 52,969. Been dancing on that recently, just starting to crack now. So a little more downside or a solid close below there should open the door to my next target, 44,944. Let's just leave it there, because that'd be a big drop. If we get it, you're talking a drop of about 15 or so, 15 or more percent to that next target. So that's Bitcoin, and that should continue to put pressure on the Bitcoin proxies. For example, Mara, Mara, I showed as a trade idea right here. And the day I did the video, I believe was Wednesday the 14th, if I'm not mistaken. We were somewhere in here, and you know, that one's good for a drop of about 33% so far. And you know, gave you a possible target here, but I'm still holding out. In the video, I gave you 24.30 24.37 is the first target, and I think we'll get there. But 28.93 is support, and we're a little bit above that now. And these are the other potential targets if we get a real slide in Bitcoin, which it's the nature of that beast. Once the tide finally turns and the momentum shifts, meaning the trend changes, Bitcoin's known for corrections of 30, 50, 70%. That's what it does. I say that because those are very aggressive targets, but if that lowest target is hit, you still have about another 66% downside. So that's MARA. Some of the other short trade ideas I mentioned recently were Movado, MOV, still looks good. The story of that one is a short here at resistance around that 30.41 level. Minimum pullback target would be the uptrend line. It started to play out. It started to pull back after the video, so it trades profitable now. Had a little kickback rally the other day, but it's still, I forget exactly where it was when we, it was right about there. We're still about where it was highlighted the other day. Semis continue to move lower. I mentioned that as a sector if you're looking for a sector ETF to short, and then a much bigger sell signal if and when this trend line breaks. Probably minimum target, I'd look for a back test of this trend line at minimum, and quite possibly move down to 366. Ally, ALLY, Ally Financial breakdown, not really doing much so far, but still looking at a first target of 42.68 and potential swing target all the way down there to about 33.50, and if so, that'd be about a 30% drop. Tesla was highlighted here on a back test or a kick back to the 772-ish resistance level right there. Rejected off it so far, but more importantly, it has to take out this trend line right here. If and when it does, that should open the door for a move down to this potential swing target all the way there at 464. That would be a nice drop too if we get that in Tesla. And if we do, that's going to take the NASDAQ 100 down with it because of the weighting Tesla has, and it's a crowd favorite as well. So 37% drop if that's hit. Tupperware, TUP, that was highlighted right here on a kickback. We had a trading range here that we were in after breaking the primary uptrend line. This is a story on a lot of stocks. They corrected sideways for a while in price consolidation zone, but this one broke to the downside. And so that sent us down to the $23 support. And it's a simple strategy when you're in these, price channels like this. Short the high, the top of the channel with a stop above, and either swing down to the bottom, which in this case was, good for so far since that video, about an 18% drop, 19% drop. You could have covered there right on the $23 level or just above it. I always cover a little bit above the actual support level. Here's a great example. Low that day was 23.09. My line was at 23.01 because if everybody sees that, that's where the buyers will sometimes step in early. So that would have been about the right area to cover, around 23.10, 23.12, 15, somewhere in there. And so far a little bounce, which also could be looks indicative of a bear flag. Let me go to the 60-minute chart. There's your impulsive drop. There's some flagging action. So if that flag breaks to the downside, and that would also coincide with a break below the $23 support, and that would open the door for an even bigger drop than Tupperware. Let me give you some additional levels if you're trading this one. And if you are, just drop a note in the comments section below these posts, and I'll make a point to do more frequent updates. Big old gap down here that has yet to be backfilled. Gaps often are backfilled at some point, so that's a long-term potential target. Things will need to get ugly in the market, and that's certainly, the potential for that has certainly been priced into the charts for a while now and continues to build. And I'm talking about the long-term, the weekly charts on the S&P 500 and NASDAQ 100. Trend remains bullish on those indexes, but like I said, big divergences and continue to build, as well as extreme sentiment readings. Let's move on to a few more and we'll get this wrapped up. WGO, what I shared in the video the other day as a short trade idea was had this uptrend line, big divergence, so that forms a big rising wedge pattern on the daily chart, just like we had a bearish rising wedge pattern here before this drop of 73% or so. And what I've added since the video, not only is that still a trend line, and you have a benefit of the doubt line because you have a big time support level right here. That was its previous all-time high or multi-year high or reaction high, followed by a lot of tests of that level. And finally, your breakout candle that helps validate that level to me is a very significant technical level, 73.60. Back test of the level, back test, back, and so we broke the trend line, but it's not been impulsive because this is as important. In other words, the reason I'll use both levels is some eyes see this, some eyes see that, so I give it the benefit of the doubt and say 73.60 needs to go. So there's our magic number. Once that breaks, I think should take us down somewhere around that first target area, maybe a little bit above. You make it a target zone. I gave you 58.72, I think, in the video. The buyers might step in here around 60.76. I'm going to put a line there and call that a resistance or target zone. Maybe 60, almost 61 right there, which is plenty. I mean, if you get it, you get the sell signal, that would be about a 17% drop. So it's pretty good. And remember, the nice thing about short trades is if you get it, stocks tend to fall faster than they rise, so you can get that quick 17% get in, get out, or you can hold out for more depending on what the market's doing. Again, if we even get the sell signal, that's the story of this video and all these videos. There's a big difference between a trade setup and an actionable trade. This is a setup. And by the way, the other thing I've added, you see these little words, note, note, note. I just click real quick. I have to type in the letters. I didn't do it yet. There's a potential head and shoulders pattern right there, and there's your neckline. So I really like the fact that if we break this, we've taken out triple support. The uptrend, the primary uptrend line, the neckline of the head and shoulders pattern, which is a trend line as well, and then horizontal price support. If you're trading head and shoulders patterns, you take the distance from the head to the neckline, the farthest distance there, and you add that to where the pattern breaks down, and look at that. I tell you, it never fails to amaze me. And I hadn't done that before. When I find these patterns, or a lot of technical patterns, I take the measured target. It just happens to project almost perfectly, or in a lot of cases, right on to the button to where my price targets would have been anyways, visually looking at the charts. And so that helps to confirm that that target zone down there. So obviously I like that one. A couple new ones. Peloton. I'm looking at. Went through a bunch of charts today, looking for some other trade ideas. That's a nice level right here, 98.68. It was resistance right here, and then boom, we tested, finally breakout candle right there, rally up, back tested it, validated that support, a successful back test, went on up to a new high, and that high was a divergent high. From there, we went on to break down, get a sell signal and a break below this uptrend line right here. And what did we do there? Came back and boom, boom, boom. So a lot of taps on 98.68. And if you are a bull and you think Peloton and the market's going to go a lot higher, this is where you step in. I could tell you it's objective. You want to take it. I see the MAs rolling over, the moving averages starting to roll over. I see the PPO trend indicator, the signal line down below the zero line. I use that as a trend indicator. It's bullish when that white line is above, as it was here. You're in a bullish trend. And when you break down, you're in a bearish trend. And often acts as the zero line, often acts as resistance when tested from below once the trend changes. And so far you can see rejection there. So to me, there's more evidence in the chart to use this as a short setup, wait for a breakdown, and enter a short position. But again, this market's been resilient, so I'm sharing these trade ideas that I can make an objective case to also go long here, and with stops not too far below. Maybe the stock continues higher. Maybe this trend indicator flips back to bullish. Targets, a lot of hot air in this one. Fundamentally, I know they make a great bike, but they didn't certainly invent the bike. And from what I hear, from top people I've talked to that have a Peloton, I'm sorry, there's a lot of good bikes out there. You have these things like, and with Peloton, their app is good, but these other companies are coming out with good apps too. The live thing you can watch. So that's what I've heard from talking to people. And so I think this bike's a little overpriced, overhyped. And I also know from talking to people they're having supply chain disruptions. Not able to deliver the amount of bikes that have been ordered recently. And so you can have bang out demand for your product, which is great. That's a problem every company wants to have. However, if you can't meet the demand, it does no good. It doesn't translate into sales. So anyway, that's just a fundamental thought there as to what might knock Peloton down, besides the fact everyone's getting the vaccine and people are getting back to work and getting out of the house and going to the gym. So If you're looking for a bullish setup, there's a downtrend line too. So right here, that's a descending triangle pattern, and here's what it's going to do. There's your previous reaction high. So any break above that, bullish, break to the downside, bearish. That's Peloton, and where I was going with that too a minute ago, I went off on a tangent. Well, from what I hear, there's a lot of other good bike makers out there, and also putting out comparable apps. Bikes that are just as good. It's like Yeti. Yeti changed the game with coolers, but now there's a Yeti knockoffs, which are every bit as good, are a dime a dozen at half the price or less. And so you get that with a first to market. They enjoyed their role for a while, but again, as you're getting the market flooded with knockoff Peloton bikes and other apps that are comparable, I think that's going to continue to put pressure on the stock, and if so, this stock could have put in a major top. So again, if you believe that and you get your short signal, just trail it down. We might go right on through 72, and then you just continue to ratchet stops periodically, and who knows where it goes. I could see this thing easily going back to its, this is where it went public right here, coming all the way back down. That would be a long-term max target right here, around 38.50. All right, let's move on, because we don't even have the sell signal yet. Couple others. Let's see if there's any more I want to update. Yeah, same ones. DXLG was mentioned in the rising wedge pattern. Still needs, this is a setup, untriggered. Divergences continue to build. That should take us down there to that 79-cent level. Low price stock. Be careful with that if you take it. BC still waiting pending a sell signal and a break of the trend line right there as the divergences continue to build. SIG, Signet Jewelers. That one was mentioned as a short right here on a back test of the trend line right there, that trend line plus resistance and the divergent high, and it started to play out so far. It's profitable. I'll have to turn off all the lines to measure it, which I can do for you, but I don't know exactly where it was in the video. Maybe right here, somewhere in there. Dropped about, I don't know, to the low 16% or so. So definitely, playing out so far. And you can see when I turn off all the trend lines, this yellow line here is the 50-day exponential moving average. It looks like it's done, at least recently, a good job of support. So drop through there, probably take it down for a run to the 200-day moving averages below. And to wrap the video up, just a quick update on treasuries. Again, I've always said this, you're not going to, treasuries aren't going to take off and scream like Bitcoin when it's rallying. They're a slow and steady gainer, but so far so good. We had the sell signal back here on ZB, a breakout and a back test of the downtrend line, and it's been stair-stepping higher. There are some potential divergences forming right now. I'm going to point that out. However, this is also a breakout level right there, or a potential breakout level, 159.05. It was a target that's already been hit once, twice, and so if we can break it out, we could burn through the divergences, and at the very least that should open the door for a move up to those next targets. Again, that's ZB, ZN if you want to trade the 10-year, very similar chart. You just have a little less volatility in the 10-year treasury bond, and there's those potential unconfirmed divergences. Maybe they burn through. We're still shy of my 132.313 target, which I think will get hit. And there's a trend line if you want to use that to manage a trade with a relatively tight stop. And if you trade ETFs instead, then you would be IEF would be your 10-year, and that's what it looks like there. There was our breakout, downtrend line, bullish falling wedge pattern, divergent low breakout and back test of the wedge with an equal low, double bottom low there, and positive divergence, and so far stair stepping up. Already hit that 114.53 target several times. It's a resistance. If we break it, opens the door to my next target at 115.82. And then TLT is your long bond. You get a little more juice because of the duration on these bonds. And there's your uptrend line. And again, if we can rally on up here, there'll be a stop somewhere along the way in here, I think, but there's potential to go all the way up there to 146, and maybe even this downtrend line. So let's just say if you're swinging it and you're looking for a longer term target, that downtrend line, but they would come in together depending on if and when we get there. And again, with TLT, if you're using bond futures, and again, I don't have to tell you this, if you trade bond futures, they're highly leveraged. Each contract's over $100,000 for a single contract, whereas TLT and IEF, you probably want to leverage those up a little because they're inherently low volatility, lower risk instruments. So you can put more money into those than you do into Apple or QQQ or something like that. All right, let me wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.